Hey, Eric here from 5minuteinvesting.com, and welcome to this week's July 29th, 2019 coaching call for Investing Accelerator. So let's look at the list of disasters for the upper half of the year. So today is June 29th, so it's good to take a look at your portfolio return to see how you're doing for the year. So here's a list of disasters that we have gathered for the last 6 to 7 months, including the Trump trade war, bans Huawei, the rumor to ban Apple, 3M earnings softened a few months ago, cut jobs, and so on. There's some impact to the healthcare side of US when Bernie tried to suggest a universal healthcare program. Boeing plane crash was back in March. Gaming companies such as Take-Two, Activision, and EA were heavily impacted. And the start of the Trump trade war round one was really back in December 2018. So those are the key events that you can think about and think about where the opportunities will be in the market next. So let's answer some questions. So Peter said, what's your point of view on selling options versus buying? I'm sure you have experience in many different option strategies. Can you share some insights in your reasoning to settle on a buying option strategy that we cover in Investing Accelerator? So when you're looking at options, whether you're buying or selling, it's really coming down to the stock market itself and what is the overall trend. And if you Google the average return for the stock market, you'll find that the stock market average return is around 7%. And this study is done over the last 30 to 40 years. So if the average return for the stock market is 7%, then naturally you have a higher chance of winning if you buy instead of sell. Now, it is possible to sell stock options, and this means you would kind of reverse every single indicator you find in Investing Accelerator to be a sell situation instead of a buy situation. But this also means that you're projecting the company to eventually becomes zero. And I think some investors make a lot of money selling options, selling the stock when the market crashes. But if the general market is going up and you buy fundamentally strong companies, then you should expect increase instead of decrease. So for example, if I completely do the opposite of what I teach you in Investing Accelerator, I would find a company with a strong downtrend. I would find a company that is failing, making losses, revenue is decreasing, people within the company is selling the stock as well, and their product launches are failing instead of succeeding. There's a ton of bad news going on, and I would try to sell at a peak based on the indicators I gave you instead of a trough. Then you would use, in that case, a put option, and you will buy a put option with a very conservative strike price, and in theory that would work. But you also run the risk that the company might actually go bankrupt and trading would cease. So one of the very famous example is when I first started investing in the market, I actually didn't do any research. I actually took my friend's recommendation because he told me that Warren Buffett's disciple invested in this company. And this company is called Horsehead Holding Corp. And it basically compressed zinc, which is a metal dust, into metal again. So I didn't do any research, and the trend was down and the company was really cheap, and I bought into it, and within 2 weeks the company went bankrupt. So even if you sold options or you buy a put in this case, the company would be taken off the market, and you wouldn't be left with anything in that case. So that is really the risk on the opposite side, and the general trend of the market is up, and the economy is growing, and the population is growing. So the underlying drivers of a stock market is still positive. So it will be quite difficult to actually try to sell the market when everyone else is trying to buy it. Annalisa, what does it mean by unrealized gain and loss? And why is it that I'm still losing, although the stock I bought through option, the price went up already from when I bought it? Is it because the Canadian dollar, the currency I use to buy a US stock exchange rate, is lower than the US dollar? So great question. And when you are looking at your return, I think chances are it's already translated into US dollars. So I think the foreign exchange would not impact your gain and loss. Unrealized gain and loss means right now what you can get if you sell it today in the market. That's really what it means. And depending on your broker, it might use the bid price or the ask price or somewhere in between. Chances are it will use the lower of, so it will be using the ask price. So when you're evaluating the unrealized gain and loss, what you want is to log into your broker account, and then you're going to get two prices, the ask and the bid. Okay, so let's say his bid is $1 and the ask is $1.2. Okay, so the broker will try to calculate your option at this price, but then in theory you would actually exit somewhere between 1 and 1.2. So the actual price you will be able to sell at, if you are selling it on an open market, it will be around 1.1. So that is really the price your option is worth at the moment. So you want to look into the bid-ask price and use the midpoint to evaluate your gain and loss instead of just the bid price. But if you're just checking on a regular basis to see how your portfolio is doing, then it's fine. But when you're selling, remember to use the midpoint instead of the bid price. Okay? And then in terms of why you're still losing, there can be two reasons. The first reason is if you recently just bought and the market hasn't really significantly gone up yet, then it's just a matter of time. You want to wait. Because when you buy into a stock, let's say for 2 to 3 months, the market is still forming a bottom, and it takes a while, for example, like right now. So instead, you want to expand your horizon to 6 to 18 months, because when you buy a long-term option, you want to exit somewhere around 12 months to 18 months, so that is 1 year to a year and a half, because you want to give enough room for the stock that you just bought to grow. So that's what it really comes down to. And the second factor that would influence the price of your option is time. So right now, you bought it 2 to 3 months ago, and the premium actually starts decreasing. So let's say the premium is $10, and over time, over the duration of your option, it might be 2 years, then it will slowly decrease from $10 to 0. So that is basically the interest expense you have on your mortgage slowly realizing by decreasing the premium. So that's why even if the stock price doesn't move, your premium will be decreasing. So that's why in Investing Accelerator, I gave you the template to calculate the break-even point. Remember the break-even point? That is the stock price it needs to go to for you to break even within the next 18 to 20 months, depending on the expiry of your option. So in summary, if I just want to simplify it, it's just a matter of waiting for the stock price to go up to hit your first break-even point that you determined earlier. And then afterwards, between your target and a break-even point, it's a matter of judgment of when you want to go out, and you can use the 3 strategies I taught you in the program to exit the market. Okay, all right. So today is June 29th, 2019. So it's good to do a review of your portfolio and a return to date. Now, here is the screenshot from my broker, TD Ameritrade, and you'll see that the purple line is my return, and it calculates the return automatically for me. So I set the time period to since inception, and what you're going to see is actually 2019 is quite a difficult year. Now, you'll see that for the last 12 months, I still made 41%. My annualized return is 47. My return since inception is 282. This is 3.5 years of return. And my last month return is 11%. Now, you'll see that 2019 is actually quite a difficult year because of all the bad things that has happened, whether it's the Trump trade war, whether it's the plane crash, and so on. So that's why you'll see more fluctuation in the portfolio return. And this also creates a lot of opportunity, and I know a lot of you have entered during this trough. For example, some of you have entered into EA, Activision, Intel, and so on. And these are great investment opportunities, and I think you have a very high chance of winning. So when you're looking at this, you can think about, the market is essentially forming a giant bottom for around 6 months. So if you want to exit the market at a higher price, then you would be looking somewhere at the end of the year. So then you allow the investment that you hold on to grow. So you would look at the end of this year or the beginning of next year to grow. This is what I expect in terms of the market and where it's heading. And you can also see that Donald Trump's re-election is coming next year. So he needs to put in some measure to really boost up the market so then he gets more votes. So it makes sense that later half the year and early 2020 will be a good time to exit before the election, because the political interests are aligned, and the trade war, the ban, and so on will be dying down a bit, and certain problems, for example, Boeing plane crash, would be resolved somewhere between June to September, and this will restore people's confidence in flights. And if you're looking at the gaming industry, you'll see a lot of titles being released in September. And for example, for EA, they're releasing a new game called Star Wars The Last Jedi Order, and that is going to be released in September along with all the sports game. So that is a huge plus. Okay, so one more reminder. So when you're looking at your return, you really don't want to be looking at it too closely. So you can check it on a weekly or a monthly basis, but you don't want to hold on to that number too tight because you want the investment to grow. And 90% of the time, you're just going to be looking at the number, but you're not really doing anything because you're just waiting for your investment to grow. And I think that's a very important mindset to have. So then you keep that in your mind. So looking at some of the investments that I'm holding, just to give you a general idea of the market and whether there are some opportunities that you might want to look into. So for example, Shake Shack right now is doing fantastic as they continue to expand in China. So I've been holding on to Shake Shack since $37, but then I exited around here. So that's just a general commentary on Shake Shack. For Baba, you'll see that right now it exited the entry zone, so then it will continue to go up. That's my expectation. Southwest Airline. So right now, Southwest Airline will mainly depend on the June 2019 earnings, as well as when Boeing 737 MAX will be restored, which the expected time frame is somewhere between June and September. For EA, you see that this company just broke through $100, and a lot of new releases are coming in September, including the game Star Wars Jedi. So if you have EA, then it's a good time to hold on to it, but not necessarily a good time to buy anymore. For Activision and Blizzard, again, it's still within the entry zone, and I think it will act similar to EA, and it will break through the upper bound here of $50 in the next 6 months or so. For Intel, right now it's going up. Now it's not particularly strong, so I still think it's going to do a W. So if you're patient, then you'll be able to enter Intel again. Square, it's doing so-so. 3M is forming its bottom, and I think it's going to do a W. NVIDIA, right now I know some of you have already entered into the market, so it's just a matter of waiting for it to go up. Tesla, this stock is quite unpredictable, so I would still suggest you to avoid it instead of jumping into it. Now Box, this one is an interesting one because there's some accounting complexity with this drop. So in a way, you may think that a W is forming for Box.com, but this will require a little bit more in-depth research. So once you have done the research, you can submit the stock, and I'll take a second look at it for you. For Google, for those who love Google, then right now is an opportunity to consider entering into Google because it's quite cheap because of the whole trade war and how Google banned Huawei from using its OS. So that led to quite a bit of negative publicity and impact on its financial statements. So right now it's going to form a second bottom, and you can see the W is forming, and you can probably wait till closer to $1,000, but if you want to enter into Google, then you want to start doing your research now. Twitter, another one. So previously, I talked a lot about Twitter during this period of time. If you are a fan of Twitter, then you might want to consider start doing research now because it's coming down to the blue and the red line. Okay, so Tencent is actually very similar to Alibaba because Chinese stocks behave the same. And you can see that the bottom has already been formed in the red line, so my expectation is that it will continue to go up. So John, if you're still holding on to Tencent, then I think in the next 12-ish to 18 months, then it'll go back up to $60. So now there's Gaming Corp, a Canadian gambling corporation, and Data, which is Tableau. And that's pretty much it. That's all I want to cover for this weekly coaching call. So I identify some stocks that are currently on discount. So if you're interested, you can do the research first and then submit it. Then I'll go through your analysis in much greater detail. And if you have any questions, remember to submit it through the forum and I'll answer it in next week's coaching call.